Welcome back to Stock Explorers, everyone. I know a lot of you are tuned in because Nebius has been making headlines recently. We've got Nvidia throwing their weight behind them with a big investment, and then you've got Jim Cramer waving red flags about the company, saying they're too risky. So today, we're going to take a deep dive into Nebius, cut through the noise, and try to figure out what's really going on.
It's certainly a fascinating case study, especially with the AI landscape evolving so rapidly. It's like the Wild West out there.
Exactly. And we're here to be your guides. We'll break down their business model, look at their potential for growth, and ultimately try to determine if all this hype is justified, or if it's just another tech bubble waiting to burst.
Sounds like a plan.
Let's start with the basics. For those who haven't been following every twist and turn, what exactly does Nebius do?
In a nutshell, Nebius builds and rents out the infrastructure needed for artificial intelligence. Think of all those incredible AI models we hear about. The ones writing poetry, composing music, even diagnosing diseases. Those models require immense computational power to run. And that's where Nebius comes in. They provide the heavy lifting, the digital muscle, if you will.
So instead of companies having to build their own supercomputers, they can essentially rent that power from Nebius.
That's the idea. It's a pretty brilliant business model, especially in a field that's evolving so quickly. The technology driving AI is constantly being updated, so buying your own equipment can become obsolete pretty quickly. Renting gives companies the flexibility to scale up or down as needed and stay on the cutting edge without breaking the bank.
That makes sense. But we can't ignore the big elephant in the room, the competition. We've got giants like Google and Amazon already offering cloud computing services. How does Nebius think they can compete with those behemoths?
Well, Nebius claims they have a few key advantages. Firstly, they're focusing specifically on AI infrastructure. It's not just a side hustle for them, it's their entire bread and butter. This allows them to optimize their systems for AI workloads in a way that the general-purpose cloud providers might not be able to.
So they're like the specialist boutique compared to the big department store.
Exactly. They're laser-focused on serving a specific need, and they're doing it incredibly well. Secondly, they boast lower costs. We're talking up to 50% cheaper than the big cloud providers in some cases.
That's a huge difference. But how are they able to offer such competitive pricing?
A couple of factors are at play here. They have designed their own server architecture in-house, which allows them to cut out the middleman and potentially reduce costs. Plus, they strategically locate their data centers in regions with cheaper energy prices. They have a state-of-the-art facility in Finland, for example, that utilizes incredibly efficient cooling technology that translates into lower operating costs for them. And those savings get passed on to their customers.
Okay, so cheaper and more specialized. Those are some compelling selling points. But how much of this is marketing hype versus actual substance? I mean, Jim Cramer isn't exactly known for being wrong all the time. What are his concerns about Nebius?
Cramer is a proponent of sticking with the proven winners, the established players. And in this case, he's very bullish on Nvidia, the company that makes the GPUs that power most AI systems, including Nebius's. His argument is that Nvidia has the market cornered on the hardware side, so why bet on a smaller player like Nebius?
So it's a question of whether Nebius can carve out a big enough slice of the pie to justify the risk.
Yeah.
Especially considering they're relying on a supplier like Nvidia, who could theoretically become a competitor.
That's a very valid point. There's definitely an element of dependence there. And to be fair to Cramer, there's always a risk associated with investing in a newer company, especially in a sector as volatile as tech.
So to summarize, we've got Nebius offering this specialized AI infrastructure, claiming it's cheaper and more efficient than the big guys. But they're going up against some seriously entrenched players and face potential challenges with their supply chain. Where do we go from here in our deep dive?
Well, to get a clearer picture of Nebius's potential, I think we need to look beyond their core business and explore the other companies in the Nebius group. Because it turns out, Nebius isn't just building infrastructure, they're building an entire ecosystem.
Ooh, this is where it gets interesting. An AI empire, you say. I'm intrigued.
It's a fascinating strategy, really.
Okay, I'm all ears.
Let's dive into that right after a quick break. Sounds good to me. We'll unpack the Nebius group and what it means for their future in just a moment. Welcome back to our deep dive into Nebius. Before we jumped into the break, we were about to unravel the intriguing world of the Nebius group.
Right. It's not just about the infrastructure play. It seems Nebius is creating an entire AI ecosystem. Tell me more about that.
It's a fascinating strategy, really. Alongside Nebius, you have three other companies, Toloka, Triple Ten, and Everyday. Each one plays a crucial role in the larger AI landscape, and together they create a kind of synergistic powerhouse.
Okay, I'm all ears. Let's break them down one by one. Tell me about Toloka.
Toloka is all about data. They're a leading provider of data for AI training. Think of it this way. You can have the most powerful AI model in the world, but without high-quality data to train it on, it's basically useless. Toloka gathers, cleans, and annotates data specifically for AI applications.
So they're the fuel providers for the AI engine.
Precisely. And what's interesting is they're not just gathering any old data. They're specializing in the kind of data needed for cutting-edge AI, particularly generative AI. That's the tech behind things like ChatGPT and DALL-E, the models that can create realistic images from text prompts or write compelling marketing copy in seconds. Toloka is feeding the beast, so to speak, helping these powerful models learn and evolve.
That's pretty impressive. It sounds like they're riding the generative AI wave right alongside Nebius.
They absolutely are. And the connection to Nebius is clear. Toloka needs powerful computing resources to process and manage these massive data sets. And who better to provide that than their sister company, Nebius?
Right. It's a perfect symbiotic relationship. One company provides the infrastructure, the other provides the fuel. What about Triple Ten? What role do they play in this AI power group?
Triple Ten tackles the human element of the AI revolution. They're a technology education company
Hmm.
focused on training people for careers in AI and other cutting-edge tech fields.
Ah, so they're addressing the skills gap that everyone's been talking about. It seems like every industry is clamoring for AI talent these days.
Exactly. And that's where Triple Ten comes in. They offer immersive boot camp style programs, teaching people the practical skills they need to land jobs in AI development, data science, and related fields. They even have partnerships with major tech companies to help place their graduates in high-demand roles.
So while Nebius is building the AI infrastructure and Toloka is providing the data, Triple Ten is creating the workforce that will actually use and maintain it all.
It's a smart strategy. By investing in education, Nebius is ensuring a pipeline of skilled professionals who will be able to utilize their technology effectively.
Okay, so we've got the infrastructure, the data, and the talent. What's the final piece of the puzzle? Tell me about Everyday.
Avride is perhaps the most intriguing piece of the Nebius group. They specialize in autonomous driving technology.
Wait, self-driving cars. How does that fit into the whole AI infrastructure play?
It's all about the connection between AI and data. Autonomous vehicles rely heavily on AI to navigate the world, make decisions in real time, and avoid collisions. And all that AI processing requires massive amounts of data. And you guessed it, powerful computing infrastructure.
Oh, wow. So Everyday needs Nebius to power their self-driving systems.
Exactly. They're leveraging Nebius's infrastructure to train their AI models,
Yeah.
process the data coming from their vehicle's sensors, and ultimately make autonomous driving a reality.
Okay, this is starting to paint a really interesting picture. We've got this interconnected ecosystem with Nebius at the core, provided the foundation for these other companies to thrive. It's like they're building their own little AI empire.
It is a bold vision. But as with any ambitious venture, there are risks involved. We've talked about the competition from the tech giants. But what are some of the other potential pitfalls Nebius might face?
That's a great question, especially since they're juggling multiple companies in a rapidly changing industry. What are your thoughts on that?
Well, one of the biggest challenges for any company operating in the AI space is managing ethical considerations and potential biases. AI systems are only as good as the data they're trained on, and if that data reflects existing societal biases, the AI will inherit those biases as well.
Host speaker, welcome back to Stock Explorers. We've been dissecting the Nebius Group, their ambitious goals, and the potential hurdles they face in this dynamic AI landscape. Now, it's time to tackle the big question. Is Nebius a smart investment?
That's the crux of it, isn't it? And as we've discussed, there are compelling arguments on both sides. On one hand, Nebius is tapping into a massive market with explosive growth potential. The demand for AI infrastructure is only going to increase in the coming years.
Right, it seems like everyone is trying to integrate AI into their business these days, from healthcare to finance to retail.
Exactly. And Nebius is strategically positioned to provide the foundational infrastructure for that AI revolution. Plus, their focus on cost efficiency and performance gives them a competitive edge, especially for smaller companies and startups that might not have the resources to build their own AI infrastructure.
So, for investors looking to ride the AI wave, Nebius seems like a tempting option, but you mentioned there are risks as well. What are the potential downsides that investors should be aware of?
Well, as we've discussed, the competition is fierce. Nebius is going up against some of the biggest and most well-funded companies on the planet: Google, Amazon, Microsoft. These giants have vast resources and a long history of innovation.
It's that David versus Goliath scenario again. Can Nebius really hold their own against those behemoths?
It's certainly an uphill battle, but Nebius is betting on their specialization and agility. They're laser focused on AI infrastructure, and they can adapt more quickly to the evolving needs of AI developers than the larger, more bureaucratic cloud providers.
It's like the difference between a nimble speedboat and a giant ocean liner. The speedboat might be able to navigate choppy waters more effectively.
Exactly. And there's also the question of Nebius's dependence on Nvidia for their GPUs. Any disruption in that supply chain could have a significant impact on their business.
Right. It's a reminder that even with a strong business model, there are external factors that can influence a company's success.
Absolutely. And let's not forget the inherent volatility of the tech industry. What's hot today might be obsolete tomorrow. Nebius needs to constantly innovate and stay ahead of the curve to maintain their competitive advantage.
So it's a high-risk, high-reward scenario. For investors with an appetite for risk and a belief in the long-term potential of AI, Nebius might be a worthwhile bet. But those looking for a safer, more established investment might want to stick with the big tech players.
That's a prudent perspective. And it's important for investors to do their own due diligence, weigh the potential risks and rewards, and make informed decisions based on their individual investment goals and risk tolerance.
This deep dive has been incredibly insightful. We've covered a lot of ground. Nebius's unique business model, their impressive growth, the interconnected ecosystem of the Nebius Group, the competitive landscape, the ethical considerations, the potential challenges. It's been a whirlwind tour of the world of AI infrastructure.
It's a complex and fascinating space, and Nebius is right at the forefront of it. I think the key takeaway for investors is that Nebius is a company with enormous potential, but also with significant risks. Their success will depend on their ability to execute their strategy effectively, navigate a rapidly changing industry, and stay ahead of both the competition and the ethical curve.
It sounds like the next few years will be crucial for Nebius. They're at a pivotal point in their journey, and it will be interesting to see how they evolve.
I agree. Whether they become the next tech giant or fade into obscurity, their story is a compelling one. They're a reminder that the world of technology is constantly evolving, and those who can adapt and innovate are the ones who will ultimately thrive.
Well said. And that brings us to the end of our deep dive into Nebius. We hope you found this exploration informative and thought-provoking. If you enjoyed this deep dive and want to stay ahead of the curve in the world of tech and investing, be sure to subscribe to Stock Explorers, like this episode, and hit that notification bell so you don't miss out on our future deep dives into the companies shaping the future. Thanks for joining us, and until next time, happy investing.